Are you feeling concerned about the decline of the dollar and its potential consequences for your investment portfolio? Well, if that's the case, rest assured that you're not alone in this sentiment. The global economy is a dynamic entity, and as a result, the value of currencies is subject to constant fluctuations. Given the ongoing weakening of the dollar, numerous investors are actively seeking out secure and reasonably priced assets. Their primary objective is to safeguard and preserve their wealth amidst these circumstances. In this video, we will delve into the top 4 assets Charlie Munger recommends for your portfolio to weather the impending economic downturn. Charlie Munger, a highly accomplished investment manager, boasts decades of experience in the field. He has been recognized as one of the most successful individuals in American history and is renowned for his partnership with Warren Buffett. Together, they have managed substantial sums of money for institutional investors worldwide. Presently, Munger holds the position of vice chairman at the thriving company Berkshire Hathaway. You might be curious about the factors that contribute to Berkshire's success. It primarily stems from the exceptional investment acumen of Charlie Munger and Warren Buffett. Berkshire Hathaway has a notable track record of paying dividends to its shareholders. Their strategy involves reinvesting these dividends into companies with strong growth potential. This approach has accumulated millions of dollars and serves as the bedrock of the firm's achievements.
Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Consequently, even as inflation gradually erodes earnings, Berkshire Hathaway ensures investors receive consistent dividend payments. This strategy remains intact regardless of the company's growing pace. Munger and Buffett's investment approach provides stability and reassurance for those who find the current investment climate challenging, perplexing, and somewhat bewildering. Undoubtedly, the path to wealth and maintaining prosperity will be far more challenging for those not graduating from college in the present era. Acquiring and preserving riches will be considerably tougher for them than for my generation. Owning a house in sought-after neighborhoods, especially in cities like Los Angeles, comes at a substantial cost. Additionally, we will likely witness higher income taxes and other related challenges. In his 98 years, Charlie Munger can confidently say that the investment world is already demanding. However, during this time, owning a diversified portfolio of common stocks was a reasonable period. This portfolio could be updated periodically by adding new investments like Apple, Alphabet, and other emerging companies. If managed intelligently, one could potentially achieve a return of around 10 or 11% before adjusting for inflation, and perhaps around 9% after factoring in inflation. Such returns were remarkable, and no previous generation in history experienced similar levels of investment success. However, Munger cautioned that the future will unlikely present the same easy investment opportunities for recent college graduates. The circumstances are expected to be much more challenging. We currently have a stock market where some individuals treat it like a gambling den, engaging in speculative transactions. This differs from those who seek to make long-term investments to secure their future, including retirement. When the stock market transforms into an unregulated gambling arena, it can lead to uncontrollable situations in a single market. In his opinion, such an environment should not have emerged. Discussions about inflation frequently arise, and many individuals express concern about its potential recurrence in the future. While no one can accurately predict the future of modern society, it is reasonable to expect some degree of inflation eventually. If this concerns you, paying attention to your financial standing is wise. Alright, before we continue, if you're enjoying this video so far, let's give it a thumbs up. Feel free to share it with your family and friends. Don't forget to subscribe and hit the notification bell to be the first to see our updates. Alright, let's get back into the video. With Munger's daily tips and market predictions, it is never too late or too early to take control of your financial situation. Whether you have recently graduated or are a college student, initiating an investment strategy can be one of the best decisions to enhance your net worth. Reflecting on history, we witnessed the New York Stock Exchange collapse in 1929. During that period, individuals and banks heavily relied on credit rather than cash to purchase equities. When these loans were called in and people and banks demanded repayment, nations faced severe financial distress, resulting in widespread bankruptcy declarations. By being proactive and informed about market trends and following sound financial advice, you can position yourself to navigate potential future challenges effectively. It is essential to be mindful of the risks of relying on credit and maintain a cautious and sensible approach when it comes to investments. Even amidst the Great Depression, the most significant economic crisis in American history, not everyone experienced financial losses. Business moguls like Walter Chrysler and Howard Hughes witnessed increased wealth during this challenging period. This raises the question, what factors enabled them to defy the odds? Were they merely lucky or inherently exceptional? The truth is, they were ordinary individuals, just like you and me. Take Charlie Munger, for example. He is the grandson of Thomas Charles Munger and the son of Alfred Charles Munger and Florence Munger, both of whom were lawyers educated at Harvard. Thomas Charles Munger, born into a low-income family in Fletcher, Ohio in 1861, relentlessly strove to improve his family's circumstances. He was known for being a stern disciplinarian who frequently imparted speeches to his family, emphasizing the benefits of budgeting and the importance of avoiding vices like gambling and saloons. Munger first met Buffett in 1959 at a homecoming party, where an Omaha doctor believed Charlie Munger and Warren Buffett would hit it off. Subsequently, Munger and Buffett fostered their relationship through phone conversations and handwritten letters. Eventually, Munger joined Berkshire Hathaway and steadily rose to the position of vice chairman under the invitation of Warren Buffett, who had observed Munger's successful investment ventures and shared investment philosophy. Munger's investment portfolio consists of various assets including stocks in Berkshire Hathaway, Costco, and Chinese companies and holdings in the Daily Journal. Additionally, he has invested in apartment houses. While this collection of assets may not be perfect, Munger believes it is sufficient. He challenges the notion by finance professors that perfect diversification is necessary for professional investment. According to Munger, having 4 good assets can be more than enough, and excessive diversification is not always beneficial. The valuable lesson derived from individuals like Munger is that many assets are not essential. It is far more valuable to have a few high-quality investments. The notion of perfect diversification, popularized by finance professors, may not always be aligned with professional investment practices.
And so I think the idea you have to have a big diversified portfolio, that's fine for the ignorant people to be fully diversified. But if you actually know what you're doing, I think 3 investments are plenty. And the Mungers, if you take Berkshire and Costco and Lulu's Asian fund, that's 90% of the money.
Their confidence and willingness to take risks set them apart from others. They invested in recession-proof assets, such as Costco stocks. Despite economic downturns, certain products and services are still in demand as they fulfill essential needs. With its extensive range of consumer goods and services, Costco provides a reliable means to combat the adverse effects of a recession. While historically a growth company, Costco also adopts a defensive stance as we enter uncertain times. Costco can be an attractive option for long-term investors seeking to allocate a portion of their portfolio to a reputable company with a proven track record of compounding wealth. However, it's important to note that its high valuation may not be suitable for short-term value plays. Another asset to consider is Berkshire Hathaway stocks. Since 1965, the firm has consistently generated average annual returns of 20%, roughly double the rate of the S&P 500. While past performance cannot guarantee future results, Berkshire Hathaway may be an excellent choice for long-term buy and hold investors solely based on this aspect. Both Costco and Berkshire Hathaway possess qualities that make them appealing to investors. However, conducting thorough research, assessing personal investment goals, and considering the overall market conditions before making investment decisions are crucial. Let's break it down into 3 key assets. First, we have the Daily Journal stocks. Nearly half of the Daily Journal's market capitalization comprises its security holdings, offering a significant margin of safety for potential investments. Secondly, we have real estate properties. Investing in real estate during recessions is wise, as it safeguards against currency devaluation. While inflation may occur, its rate varies during an economy's recovery, resulting in periods of both spikes and stabilization. Real estate, in particular, tends to appreciate over time, especially when faced with inflationary pressures. Lastly, let's consider building a diverse portfolio. Charlie Munger wisely advises that being able to identify and invest in 4 solid opportunities is already a remarkable achievement. Expecting to handle 20 investments successfully is often unrealistic. It requires exceptional intelligence and insight. However, if you aspire to emulate the success of Charlie Munger and build your net worth, it's never too late to start. Begin by focusing on your passions and interests. By subscribing to this channel and exploring previous videos, you can gain valuable insights into making profitable investments aligned with your passions. This can lead to creating a passive income stream and contribute to establishing a solid financial foundation.